Central Bank Monetary Policy Committee raises interest rate for the first time after 2 years to 13%. Securities and Exchange Commission intensifies effort to tackle identity theft in capital market. Shares in Asia Pacific mix as New Zealand Central Bank hikes rates again. Plus, oil prices extend gains on tight supply, firm demand expectations. This is Business Express on the network service of the NTA, and we are reaching you from Abuja, the nation's capital. I am Benny Adams, your guide. Good to have you join us at this time, and it is that particular time we talk business. We'll start by telling you that Nigeria's economy is on the path to recovery despite the impact of COVID-19 and the most recent Russia-Ukraine war. The just sworn-in Statistician General of the Federation, Semiu Adeyemi Adeniran, says Nigeria's gross domestic product (GDP) for the first quarter of 2022, which stands at 3.11%, is remarkable and will be likely surpass the 3.14% predicted by the International Monetary Fund, the IMF, for 2022 at the end of the year if the trend is sustained.
As a matter of urgency, we will accelerate our ongoing work with the World Bank in revising our methodology for producing labor force statistics in Nigeria. This is very important as it will ensure that we move to a system where we generate on a sustainable basis adequate quarterly statistics on labor market and unemployment in Nigeria to inform government on the situation of job they are creating.
On the rebasing of GDP, Adeniran said the ongoing survey of nationwide businesses would enable government determine the structure of Nigeria's economy, the sectors that drive growth, and the sectors that require intervention to improve. The National Stakeholders Working Group of the Extractive Industries Transparency Initiative, NAITI, is advocating social inclusion and environmental accountability in the extractive sector of the nation's economy, while advocating stronger disclosure of payments and revenues from extractive resources. The issue of gender inclusion in reporting the extractive industry was central.
These disclosures are key to national planning. They are key to solving problems in our society.
Environment is the core of extractives and should be part of the EITI reporting.
And to ensure candidates for the 2023 general elections give accurate tax and assets declaration in their forms, INEC and relevant tax authorities as well as anti-graft agencies have reached an agreement to work closely. The partnership was sealed during a meeting at the INEC headquarters in Abuja.
Anyone whose tax status is not in harmony with their declared asset should not be entrusted with public office.
Refusal to do that shows that such a citizen has no concern for the fate of his country.
We need to begin to check and to make it clear that we will not take anything for granted.
Leadership comes with enormous responsibilities. and persons entrusted with that responsibility must respect the Constitution and laws of this country.
The Central Bank of Nigeria says the country's sovereign debt has not been delisted from the JP Morgan Bond Index. The Apex Bank said the bond was only downgraded from overweight status and it should not be blamed for the removal by the US-based investment bank.
We were only reclassified. Nigeria's rating, I would say, was reclassified from overweight to market weight, which is just a mere reclassification of our size in the index, akin to a rating agency changing your outlook from maybe positive to stable.
In the first quarter of 2022, Nigeria's foreign reserves fell to $39.5 billion. And now, the Central Bank of Nigeria's Monetary Policy Committee has raised monetary policy rates to 13%, a first rise in 2.5 years. Governor of the Central Bank, Godwin Emefiele, while presenting outcome of the meeting, noted that the bank will continue to keep rates for development finance at single digit for up to 10 years. Leah Katumbabatunde has the report.
The changing dynamics in the global economy has continued to affect the journey to recovery. The war between Russia and Ukraine, supply chains disruptions, increasing inflation and debt levels, as well as rising energy demands are some of the factors affecting monetary policy makers' decisions around the world. While Nigeria sees a sustained growth trajectory since the recovery from COVID-induced recession, the Monetary Policy Committee found it necessary to increase the monetary policy rate to 13% and retain all other parameters.
MPC feels compelled that tightening would help moderate the inflationary trade-off from the steady growth recovery so far recorded and improve real GDP. MPC also feels that tightening will help rein in inflation before it assumes a galloping trend.
And in restating commitments to ensure deeper financing for priority sectors, Governor Emefiele affirmed the prospects are bright for the economy with effective collaboration between fiscal and monetary authorities.
What is important here is that this decision has been taken because we felt that there may continue in the next couple of months to be an aggressive acceleration in inflation. And we think there is a need to take some drastic action to reverse it. If we're able to see a reversal, perhaps we can begin to say, yeah, we're returning to what we can call the normal periods when we're looking at moderating, using CRR to moderate inflation, and at the same time using our development finance to really push for growth.
The decisions reached at the meeting signify an increase in lending rates as rising money demand pressure may linger till the 2023 elections. In Abuja, Leah Katumbabatunde.
And joining me to talk on the monetary policy stance of the federal government at this point in time is a macroeconomic policy analyst and national program coordinator, Trade Network Initiative, Chris Kaka. You're welcome to Business Express.
Thank you for having me.
I had you recently.
Yes, you did.
Well, 11.5% to 13%, talking about a 150 points increase. Did you expect that? Did you see that coming, following prevailing circumstances?
My response would be yes, but then let me explain to you why I said yes. It is the responsibility of the central bank to not only look at the supply and cost of money, but also the value of the currency itself. And one thing that actually challenges currency is inflation itself. And so before the meeting, you will realize that the consumer price index was at about 18, all-time high, and it was imperative for them to deal with it. It is also important to say that the central bank also realized that what was driving the inflation wasn't the argument that there was excess liquidity in the market itself, but it was like said in your prologue. Look, the issue of the Ukraine Russia crisis was putting a lot of pressure on as Nigeria being a member of the international market. Above that is the fact that, look, with the COVID outbreak outbreak again in China, a lot of their factories are actually closing up. So there is that supply constraint. Made worse is the fact that insecurity is a big challenge in Nigeria. So farmers are not able to go to farms anymore, and what they are supplying is below the demand for the market. So the margin between supply and demand has become wider, and that's why you see that there is inflation. So I say yes because with all those things on the ground, it was important for them to increase, because in any case, the US Federal Reserve just recently increased their own. The UK did the same thing did so, and Nigeria is a member of the international financial community. It was imperative for them to also react to it. So it was obvious they were going to increase it, but the margin of increase was what we didn't understand about it, and so that was why they increased. So you will notice that they never touched the CRR, because if it was a case of an increase in liquidity in the market, they would have had to actually increase the CRR, and they may then have to actually deal with the issues about the current 30% of liquidity rate, which we have. So they understood what was going on. It was imperative for them to actually have done what they did.
Okay. For the points, 150 points, though the CRR remains steady, liquidity remains steady, all those other parameters have been maintained.
Yes.
What does this imply for the economy, this particular increase?
The increase obviously will be that, for households trying to lend for consumptions, you might begin to be facing a higher interest rate for you to pay, and so you want to begin to see a situation where people consumptions is beginning to fall. Yes, your GDP might grow at a very slow pace, but these things are just for a few period of time, because the central bank, is going to have to review it. But beyond that is the fact that, look, if it continues like this, you find that cost of production is going to increase, because here are the manufacturers themselves having to borrow money at a very high interest rate. If care is not taken, they may have to begin to lay off workers where they are not able to pay. So these indices have got a negative impact. But then it's the central bank doesn't just fix the numbers and then say, I'm on a cruise flight, let us relax. They're also watching the indicators and see what to do next. But then it's important to add that, look, they were smart enough to have said, like, okay, this is the threshold, which is about 13%. But then the development finance will continue to remain at 5%. So, for instance, the anchor borrower scheme, which has dropped the interest rate from 9% to 5%, they will still continue to lend to them at 5%. And so they were very sensitive enough to ensure that, look, productive activity continues.
Like those special interventions.
But then for borrowing for consumptions, they have been able to cage the capacity of deposit money banks to be able to give out free loans and all the rest.
Well, though you've answered partly my next question, but I really want you to delve into it much more. How can we create a balance? We are looking at a situation whereby we should encourage growth, more like the impact of COVID-19 is still being felt. You are trying to handle inflation. You are tightening this money. The money policy is getting tightened. How can you encourage growth? What sectors should we be looking out for? What sectors should we support to ensure we create that balance?
I think to answer your question, if you look at the succeeding National Development Program, because that's where everybody begins to take their trust of what they do. After the end of the Economic Recovery and Growth Plan, the federal government then came up with the national, they came up with the Nigerian Economic Sustainability Plans, which was the medium one.
Yes.
After which they then have one that will end from 2021 to 2025 thereabout, which is a national development plan, which is going to be costing us almost about 348 trillion naira to actually form. The government has a component of it, the private sector have their component of it. What is really happening is that now they're looking at a 5% growth. To actually see that all these things come to pass is that, look, you continue to pump your money in the productive sector. A lot of us begin to think that, look, you need a strong currency to build a strong economy. What you actually need is that a strong economy brings the strong currency. I don't know if you follow me.
Yes.
So the idea is pump your money into productive sectors where you think you can be able to build capacity in import substitute. Do that so that you are able to see more forex coming in. Let me say this, by the way. A lot of people are clamoring that, look, the exchange rate is really bad now. We've devalued our currency very bad. It is important to say for the record that, look, devaluation of currency itself is also a strategy by the central bank to actually make your import very expensive and make your export very cheap for you to do. So sometimes it's a deliberate strategy by the government itself to improve exports when you begin to actually devalue your currency. But then you need to be very careful where you draw the line. And when you do it, you must be sure that you have built the capacity to have that import substitute. Because where you make your export, where you make import very expensive and you don't have the domestic substitute for it, it means that your manufacturers who depends on imported products for you to...
Particularly for machinery.
I mean, it's like you just created a problem to solve another problem.
But yes, still talking about capacity, how then do we look in country to boost capacity for production so that, yes, we know Nigeria is a member of the global community, whatever happens in China, talking about the supply disruptions as a result of coronavirus, then the Russia-Ukraine war, the also supply disruptions, energy and all that, which we're also dependent. How can we build better in country to a kind of reduce the over-dependence on all of these regions?
It's not possible. There's no country that is actually in isolation right now. Everybody trades amongst themselves somewhere along the line. Whether you are trading with members of your continent or people outside your continent, you must actually interact with one of these people because you don't remain in isolation. However, what we need to do is to begin to look at where we have the comparative advantage and then begin to pump our resources into it. I get surprised when people say, bring in GMOs into this country, let's begin to grow GMO. If you begin to grow GMO, that sector for which you have the comparative advantage, which is agriculture, you lose it because you are not able to sell that organic product to them in the international market. They've got it there. They've got the GMOs there. And so when you bring it here and you sell back to them what they have, it's not going to fly. So I'm saying, look, let's put our money into the agricultural sector. Let's not just be, we've been saying so much, diversify the economy, spend money into this. That is where we've got that comparative advantage. If we can do some value addition, a bottle of water you and I know is sold 100 naira here, but you walk into some shop, it is 500 naira. You don't question why it is. It has got a place value. Just make sure you add value to it, change it back to where it was, and send it to the right market. Somebody is willing to pay for it, and that will bring in the forex that we actually require in this country.
Inflation is a global issue.
That's correct.
Nigeria's case is also a different one. Different in the sense that the elections are around the corner. How can we get to manage this? And in asking that question, what do you think the banks should do in terms of choosing priority areas to increase, to pay attention to, more like increase investment?
I think every election period, there's always tendency, and I think that's where the assumption comes for the generality of most people that there's a lot of money in circulation, which is not actually correct. For me, I think government needs to deal with the insecurity problem. Inflation will continue to rise. The next monetary policy committee, if we're not careful, will increase the interest rate much higher, except we deal with these issues. We need to deal with the issues of exchange rate. If it's not a deliberate policy of government to devalue the currency, we need to address it. Because if you don't, it's going to create bigger problem. Addressing security issue. Let people freely be able to go to farm. Let people be able to go to their business and produce things and be able to supply to the market. Because the moment you continue to create that huge gap between supply and demand, you create a problem. Having said that, the monetary policy has done that. You also require some form of physical measures to actually address this thing, which is what I said.
Yeah.
The executive need to do something. The Ministry of Finance needs to also come up with some form of policies to actually see how they can also help to address this particular challenge, which we have on ground at the moment now.
Thank you so very much, Chris Kaka, for sharing your thoughts with us at this particular point in time.
My pleasure being here.
Thank you. Moving on, gold prices dipped slightly on Wednesday, receding from a 2-week high hit in the previous session as the dollar reclaimed some ground, but uncertainty over the trajectory of inflation supported safe haven bullion's outlook. Let's take a look at prices of other commodities in the market. Oil prices rose more than $1 on Wednesday, buoyed by tight supplies and the prospect of rising demand from the upcoming start of the summer-driven season in the United States. The world's biggest crude consumer, Reuters reports that Brent crude futures for July rose 1.2% to $114.94 a barrel earlier. Brent futures gained 0.1% on Tuesday and are up for a fifth day. US West Texas Intermediate crude futures for July delivery rose 1.2% to $111.12 a barrel. The contract settled down 52 cents on Tuesday. And the Securities and Exchange Commission has stated that the identity management system being developed by the capital market will tackle the lingering identity management issues while allowing room for scalability as technology evolves. This was stated by the Director General of the SEC, Lamido Yuguda, when he received members of the Committee on Identity Management for the Capital Market in Abuja. Yuguda said the Commission decided to engage relevant stakeholders in a bid to resolve issues of identity management to tackle the problem of unclaimed dividends, explaining that the problem of unclaimed dividends had to do with identity management. Hence, the Commission is currently engaging stakeholders to harmonize various databases of investors and facilitate data accuracy in the market, as well as increasing investors' education to stem the trend. Chairman of the committee, Mokedi, said the committee's work exposed the need for standardization of systems within the Nigerian capital market that would support open finance, which the SEC can drive, adding that the SEC could leverage on the committee to develop the framework for the Nigerian capital market. Well, trading advanced this Wednesday for the first time this week on the Nigerian equities market as the NGX All-Share Index appreciated by 1.24% to close at 52,591.41 basis points. Market capitalization increased to 28.352 trillion naira. Investors exchanged 382.4 million equities valued at 4.233 billion naira in 5,922 deals. Asia-Pacific stocks were mixed on Wednesday. Bosirable has more on that.
Hello, this is the Global Market Review. The World Economic Forum continues in Davos on Wednesday, with the event bringing together political and business leaders from around the world. This year's summit comes after years of COVID-19 pandemic amid Russia's invasion of Ukraine, which is at the top of the agenda. This, however, sets the tone for global markets. European stocks moved higher on Wednesday as global markets tried to bounce back from a widespread retreat in the previous trading session. Shares in Asia Pacific were mixed on Wednesday, with New Zealand Central Bank announcing yet another rate hike. Hong Kong Hang Seng Index advanced 0.29% to close at 20,171.27. The Shanghai Composite topped 1.19% at 3,107.46, while the Nikkei dipped 0.2% across 26,677.80. US stock futures were flat Wednesday after a sharp decline in Nasdaq Composite during the previous session, while traders awaited the Federal Reserve's release of its policy meeting from earlier this month. Futures tied to the Dow Jones Industrial Average declined 0.03%, while the S&P 500 and Nasdaq Composite were marginally positive. For African stocks, Tunisia's Tunidex and Namibia's overall index were positive. South Africa's GSE Africa Top 40 negative, while Ghana's GSE was marginally positive. That's the Global Market Review. I am Bossede Abel.
Let's quickly take a look at how the Naira is exchanging for other currencies. is where we end this episode of Business Express. We value your feedback. Do join us again on Thursday morning. I am Benny Adams saying, stay safe.